Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Tower Semiconductor.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we get into today's stock, here is a useful tool for investors who want a faster and cleaner research workflow. You can check out stockanalysis.com Pro through the link below in the description. Use discount code ITP for 10% off. Stockanalysis.com is lightweight, fast, and works on desktop, iOS, and Android. The free version is useful for checking stock prices, financials, charts, forecasts, and news. But if you want deeper research, stockanalysis.com Pro gives you no ads, saved screeners, watch lists, portfolios, long-term financial history, dividend history, analyst filters, ETF data, and exports to Excel, CSV, and Google Sheets. Pro comes down to about $5.93 per month when billed annually after the discount. For heavier users, the unlimited plan adds unlimited downloads and unlimited stocks per watch list, and comes down to about $14.93 per month when billed annually after the discount. Stockanalysis.com is a research tool, not financial advice. It does not tell you what to buy or sell, and it does not guarantee investment results. Always do your own research and make your own investment decisions.
This is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
So, jumping right into our discussion today, we really need to highlight this explosive market action.
Yeah, absolutely. I mean, we are looking at a massive 29.8% surge in just a single week.
Right, which is, well, just to put some analytical weight behind that, that violent move actually landed Tower Semiconductor squarely among the top 10 large-cap gainers in the entire market last week.
Exactly. And, that emphasizes a huge core narrative shift for anyone watching this stock. This is no longer just some sleepy, mature node foundry. It's rapidly becoming this massive momentum leader that is directly tied to the whole AI boom.
All right, let's move into the wealth building context.
So if you're looking at this from a growth angle, you have to look at the central thesis here. Tower Semiconductor is executing a massive structural step change.
Right.
They're doing this by totally leveraging the AI infrastructure boom, specifically through something called silicon photonics.
Which I think we need to frame properly for the listener, because if you look at their business model right now, it's essentially like being a commercial landlord who just got years of rent paid entirely upfront.
Oh, that's a great way to put it.
Yeah, because if you look at the staggering numbers here, they have secured $1.3 billion in silicon photonics contracts. And that's specifically locked in for 2027.
Which is still years away.
Exactly. And on top of that, they got $290 million in direct capacity prepayments from these massive blue chip customers.
Right. They literally just handed them the cash.
Yeah. And, it's important to understand why this is so incredibly rare and valuable in the semiconductor space. It provides them with massive, completely de-risked revenue visibility stretching all the way into 2028.
Now let's look at the fundamentals.
So if we look under the hood at the financial engine driving this whole narrative, focusing on revenue and profit margins, we have to dissect their Q1 2026 earnings.
Right, because that's where the real proof is.
Exactly. And, as someone who tends to be a bit more cautious and practical, I was actually blown away. Revenue was up a very solid 15% year over year.
It's good. Way.
But the net profit surged an astonishing 62% year over year.
Wow.
Yeah. It shows this massive operational leverage they have, and management is completely backing this up with their record Q2 guidance, which is projecting roughly $455 million in revenue, plus that $290 million in customer prepayments we talked about. That essentially acts as a huge off-balance sheet capital infusion. It allows them to fund their capital expenditures entirely internally without diluting shareholder equity at all.
Which is huge for the thesis.
Yeah.
But I have to ask a question based on that. How deep is Tower's moat, really?
What do you mean?
Well, compared to the absolute giants out there who just focus on building smaller and smaller transistors, right? By focusing on this specialty foundry, demand like silicon photonics, RF, and power management towers clearly pushing for much higher average selling prices.
Right.
Because if you draw a comparison to an industry peer like UMC, they actually push their margins near 30% using a very similar specialty node playbook.
Yeah, that's a really great comparison. And to answer your question about the moat, it really comes down to the extremely high switching costs. Because specialty foundry manufacturing requires deep, collaborative co-development IP. It's not just plug and play.
Right, you can't just move your designs overnight.
Exactly. Once a Fables customer goes through the process of taping out a highly complex photonics design with tower-specific equipment, the cost to suddenly switch to a competitor like, say, Global Foundries or UMC is just prohibitively high.
That brings us to the catalyst timeline.
So what's actually going to drive this in the near term?
Well, if we focus on what will move the stock in the next 3 months and beyond, current consensus estimates on Wall Street are explicitly being noted as, quote, likely still too low.
Which is exactly what you want to hear.
Yeah. So the upcoming Q2 2026 earnings report is shaping up to be a major potential catalyst. Analysts are basically going to be forced into this massive wave of upward earnings revisions just to match that record $455 million guidance.
And from a practical macro view, connecting Tower to the broader picture, as long as AI optical interconnect demand remains this dominant market narrative, Tower is going to enjoy massive sector tailwinds.
Yeah, for sure.
Plus, we have upcoming industry conferences, and those serve as a huge catalyst because management can finally detail the specific margin profiles of their 50-plus active customers.
Right. The market loves that kind of clarity.
Now let's pivot to the chart.
So how does all this fundamental strength translate into actual price action?
Well, breaking it down analytically, a 29.8% weekly gain on a chart is what we call a violent breakout. It has decisively cleared all the overhead supply and historical resistance. It establishes a very clear, structurally sound pattern of higher highs.
And, adding some growth context here, I really want to prevent listeners from thinking this is just some speculative retail short squeeze.
Right. It's definitely not that.
No, this is driven by institutional-grade volume. When a stock moves this aggressively, especially on the back of a fundamental mega contract like that, it signals a permanent structural re-rating by the wider market.
So what does market sentiment look like?
Honestly, the sentiment is overwhelmingly bullish. Tower is just dominating the positive news cycles right now.
Yeah, they're everywhere.
And they are heavily favored by the most accurate Wall Street analysts covering the sector. Plus, I would argue that the $290 million in customer prepayments is the ultimate smart money endorsement.
Totally.
These customers are literally putting their own capital on the line to back Tower's execution.
Yeah, but we do need to do a quick risk-aware rumor check here, because we have to address the elephant in the room, which is the speculative buyout chatter.
Right, Intel.
Exactly. We have to remind people of Intel's previous failed attempt to acquire Tower. And while some people speculate that a domestic or financial buyer might try to swoop in for instant capacity, the current geopolitical climate makes cross-border chip deals incredibly tough right now. But more importantly, the new $1.3 billion deal proves that Tower can thrive completely independently. They don't need a buyout.
Now let's talk about the risks.
Yeah, because we need to bring this back to earth. Looking at the macro environment, the broader market is really struggling right now.
Right, inflation fears.
Exactly. Rising oil prices and spiking treasury yields, which, by the way, recently triggered a massive 537-point drop in the Dow Jones.
Ouch.
Yeah. And generally speaking, higher yields compress the valuation multiples on growth stocks. Then you have geopolitical friction. Recent talks between Trump and Xi ended without any major chip agreements, which naturally raises fears of new export restrictions.
That's fair, but as a counter-thesis, Tower's focus on mature specialty nodes largely insulates them from those bleeding-edge bans that hit the other major chip makers.
That's true, but there is a second risk here, and it's internal. Execution. Tower must successfully deploy that $290 million to actually build the physical capacity for the 2027 ramp.
Right, they have to deliver.
Yeah, any delay in tool delivery or any issues with the yield ramp risks severe customer penalties. They can't mess this up.
I get that. But in their defense, because the customers actually provided those prepayments, they are financially invested in Tower's success, which inherently de-risks the CapEx phase.
Yeah.
The customers want this to work just as much as Tower does. So with everything on the table, what's the final verdict?
Well, the numbers are in.
Yeah, they are. So revealing the final quantitative research rating, we have a bullish score of 9.
Wow, a 9.
Yeah. And to give a quick elevator pitch summary, Tower Semiconductor represents a truly rare asymmetric opportunity. They are seamlessly transitioning from a somewhat cyclical, mature foundry into a highly leveraged AI infrastructure play, complete with unprecedented revenue visibility.
And from a long-term investment view, the research points to a clear, multi-year hold target horizon.
Right.
Holding through the execution cycle all the way to the 2027 silicon photonics ramp and the 2028 capacity reservations is what the research suggests is required to capture the full margin expansion. If you want to build a cleaner stock research workflow, you can check out stockanalysis.com/pro through the link below in the description. Use code ITP for 10% off. Pro comes down to about $5.93 per month when billed annually after the discount, and Unlimited comes down to about $14.93 per month when billed annually after the discount. Remember, stockanalysis.com is a research tool, not financial advice. It does not guarantee investment results, and you should always do your own research before making any investment decision. This is an affiliate link, and we may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode. YouTube description, CTA. Stockanalysis.com, Pro Unlimited.
Stockanalysis.com/retop when we fit bot re-FS even 2 bot DP.
Use code ITP for 10% off.
About $5.93 after discount when billed annually.
About $14.93 after discount when billed annually.
We may earn a commission if you sign up through our link.